Hey everybody, I'm just going to quickly go over what I'm watching in the market for tomorrow. Long story short, we've been in this major uptrend channel for since March, and we've barely broken out of it. So the fact that we broke out of it is pretty bearish. However, the idea of a extended move down, like a further move down, is kind of unlikely with probabilities, but anything can happen here. So I'm watching the put to call ratio tomorrow morning, and I'm gonna be watching for a break above this 1.06 level because it seems to be um, a very important resistance level. Um, Usually the put to call ratio doesn't really get over 1. The higher the put call ratio is, the more puts that people have. So I mean, when it's really really high, it means that everyone is positioned for a down move. So I mean, back in March, we did get some very high readings. Um, a lot of days, quite a few days, we were up to 1.33 on that put to call ratio. So we got to be watching for that. I mean, I'd like to see a breakout over 1.05, and then the next level would be 116, 133 would probably be the levels I'd be watching. It'd also be good to watch for breakouts in the VIX. Um, the next resistance level being right around 40. Um, we'd like to see. I'd like to see the VIX, climb up over 36 and head to 40. Um, so we want to see that, but the put call ratio is very important. We got to watch that to see if the move could be completed already. So for tomorrow, I am watching to see if this move continues. So a couple scenarios are that we move up to 222.5 and we find resistance there again. And if we get rejected hard off that level, you could see some sort of like a W or a continuation pattern actually. So if we do go up to 222.5 and then we bounce, that'd be very bearish. If we gap up tomorrow and we open up around that level and then we open up pretty bearish, that could be a sign we're going to go right back down to 220 and test that level again. I mean, I don't really see us going over this trend line here and getting back into that trend. But I mean, if we broke that, that'd be pretty wild. I mean, and I mean, if we broke the 225, I guess we could go to like a 3% day. I mean, I think that'd be kind of ridiculous, and I don't really think that could happen. So I mean, I think the best case for bulls is we go in between this trend line here, and we close between 223.5 and 225. That's like the best case scenario, I think. That'd be rather bullish, and indicate that the next day we might be going to 228 for Friday. But if we do stay below this 220 level, or even if we go up tonight and we come down under this 220, it doesn't matter how we get there. But if we're below the 220 level in the market tomorrow, after the first like 10 minutes or so, or maybe even during like the open, um, depending on how the market looks, it could be a good opportunity to get short if we stay under that or break under it again, because it's a very significant support level, and there's not really much support until 215. So under 220, the QQQ is a short, and over 222.5 is kind of a neutral area for me. Whereas if we really broke this trend line, you could get a nice quick gap to 225. So that'd be a nice little, you could get a nice little swing on some call contracts. But yeah, that's about it. So I'm not bearish and I'm not bullish for tomorrow. I just think that we got to watch for this 222.5 level and this 220 level for entries to the downside. But we want to see weakness.